We have a special treat now. We have Citadel's Ken Griffin in an exclusive interview with David Rubenstein. Let's get to that.
Like a lot of traders, you don't actually live in New York. You live in Chicago, right?
Chicago's home.
Okay. So let's start with your beginning. You grew up in Florida, is that right?
I was born in Daytona Beach. My father worked on the space program. And then when the space program went down, he moved off to Wisconsin to work at G Medical Systems with Jack Welch in Wisconsin. So I grew up in Florida, Wisconsin. We went to Texas for a brief period of time, and then back to Florida for middle school and high school.
So you went to high school in Florida?
I did.
And were you like top of your class or something like that?
That was Dolores DeGroff. So Dolores was valedictorian. I'm embarrassed. I don't remember who salutatorian was. It wasn't me. I did okay. Wasn't top of the class. Did okay.
All right, but you applied to many colleges, and you applied to Harvard. And Harvard you got into. So to get into Harvard, you have to be pretty near the top of your class. So were you surprised to get into Harvard, or do you think you were going to get in?
So David, I've spent my entire professional career working on probability.
Okay.
Right, so odds stocks can go up versus down. So when I applied to college, I played the same game. In the dark ages of using a typewriter, I typed out about 13 different college applications.
Okay, and so your chance of getting in each of them, you applied to 13 colleges, or?
Right, and I'll get into one of them, hopefully the best I can get into.
Now, you were the president of the math club in high school, so I guess you were pretty good at math?
I was pretty good at math.
Okay, so you got into Harvard, and when you got into Harvard, did you decide to go there right away, or you wanted to see if the other schools were going to accept you?
That is a complicated story. My father's business partner was a Princeton graduate, and Princeton was my first choice, and my father had a falling out with his business partner just before the time you pick where you're going to college. And my dad said it would break his heart if I went to Princeton. And I went to Harvard.
Well, that's broken the heart of the Princeton development people, I assume now, because...
Well, one of my partners at Citadel, who I've had the pleasure of working with for almost 2 decades, actually served on Princeton's investment committee oversight, and I think he's done wonders to help Princeton feel better.
Oh, okay. So you go to Harvard, and most people go to Harvard, they don't know whether, when they get there, they're going to be smarter than everybody else or not as smart as everybody else. When you got there, did you say these people aren't as smart as I thought they would be, or actually they're smarter than I thought they would be?
I'm pausing because I never actually thought about that.
Okay.
Went through my, I'm at Harvard. I am so fortunate. I'm at one of the greatest institutions of higher education in the world.
Okay, but the legend is that you began trading convertible bonds out of your dorm room. Is that true or not?
That is true.
But did you do that in the freshman year, or you started that later?
So my freshman year, and I'm at Bloomberg, so I need to say a moment of gratitude for everybody in the press. My freshman year, there was an article in Forbes on Home Shopping Network, written by Gretchen Morgenstein, who's over at the New York Times. And it was a great article as to how Home Shopping Network was overpriced. And having read this article, I went and bought 2 put contracts in Home Shopping Network. And lo and behold, the stock cratered like 30 or 40% shortly after I bought these puts. And when you make a few $1,000s as a freshman, you are rich. Like this is the moment you have dreamed of. And that was what really started my interest in trading.
I mean, you had never been that involved in it before?
I'd never traded a financial asset before then.
So you started doing more of that, is that right?
So the most defining moment of my career, in some sense, was I went to sell these 2 put contracts, and this is the days of floor-based trading. There were no electronic trading. Markets were the good old days. And in the good old days, when you went to sell an in-the-money put, the market maker would pay you less than the intrinsic value. And I realized that the market maker's profit was risk-free. That, in a sense, you're going to get a kick out of this $50 off of me in a risk-free way. And that really drove my interest in the pricing of derivatives, which is what led me into convertible bond arbitrage, which was trying to understand how does one price an equity derivative as compared to the common stock.
Hey, but you know, your classmates at Harvard, they're presumably doing other things, not worried about convertible bond arbitrage, right? So what did they think of you?
I was a bit of an anomaly.
Right.
I mean, look, my classmates and I were same experiences we all had. We debate politics like rapidly. We would have fun playing soccer in the yard at sunset and hope not to run into a tree. And you'd have your Friday night fun. So it was a college experience, but I spent a lot of time at Baker Library just trying to understand and trying to learn about finance.
Okay, so the story is that you installed a kind of receiver in your room so you could receive data. Is that true or is that a legend?
It's true. So this is the early days of Harvard saying no to any form of business on campus. And the supervisor of the building gave me permission to put a satellite dish on top of the building so that I could have real-time stock quotes. Because remember, we're before the days of the internet. There is no way to get quotes other than, for example, a satellite dish. And I put the dish on the roof, threw the cable over the side of the building, pulled it in through the window and down the hallway into my dorm room. And with that, I had access to real-time prices to facilitate my trading.
Did you have a roommate that said this isn't a good thing to do, or no?
I purposely chose a single so I would not have a roommate that I would annoy every day.
Okay, so you presumably did reasonably well. And so by the time you graduated, did you say, I'm now going to do this full time? Because what had you thought you were going to do when you graduated from Harvard if this hadn't arisen?
You're going to love this. So there's two stories in that question that I think are worthy of talking about. So I work with portfolio managers for 30 years now. And timing is so important in one's career. When I started to engage in convertible bond arbitrage in '87, I literally launched in September of '87. And I was very confident as to how this portfolio would behave in a bull market and very uncertain as to how it would behave in a bear market. Like the mathematics on the way down are just much more nebulous than on the way up. And so I was short more stock than my back of the envelope math would tell me to be short. And what happened a month later was the crash of '87. And so at that moment, I became boy genius. Now, I knew I was boy lucky because I was short the market intentionally, but outside investors go, look, this person's a genius. He made money in the crash. So that was a very defining moment in my career, was the crash of '87, and being net short gave me a track record early on that was attractive to investors.
All right, so you made money for this group of investors. You had investors when you were in college? Some people gave you some money?
A gentleman named Saul Galkin was in a... I had a friend who was a retail broker. This gentleman, Saul Galkin, came in to chat with my friend and I. And my friend said, tell Saul what you're thinking about doing in the convertible bond market. I laid out to Saul my idea, and Saul goes, look, I got to run to lunch, but I'm in for 50. Now, I had no idea, but my friend's like, you just got your first $50,000 to manage. And that was really what gave rise to the start of my trading career.
So if you hadn't succeeded this way, what would you have done, do you think, when you graduated from Harvard?
My dream was to do private equity.
Wow. Okay. The highest calling of mankind, as I've said. Okay.
Well, remember back in the 80s, right? So this was the pivotal moment where private equity was first hitting mainstream America, right? KKR with RJR, front page of every business magazine. And I thought, how incredible the opportunity to reshape businesses in a very profound way that was not being done in the public markets.
In those days, people who went to Harvard College interested in business often said they would go to Harvard Business School or some other very good business school. Did you ever think about that?
Having one of those days. So I did. I called Harvard Business School when I went over to Harvard Business School. I want to go here. And I took sophomore standing my first year. So if you have passed enough AP tests, you can complete your Harvard degree in 3 years. And I wanted to go right to business school and do that over the course of 5 years. And Harvard Business School said, no, you've got to go work. You cannot come here until you've had your 2 years of work experience. So the answer is I absolutely wanted to go to Harvard's business school and was denied.
So you and Warren Buffett both did not get into Harvard Business School.
That is a fair way to put it.
So, okay, so when you graduated, you decided you'll set up a trading operation. And by the way, let's explain to people who may not know what a convertible bond is. Can you explain what that really is?
So a convertible bond is a debt instrument issued by a company, exchangeable for the common stock of the issuer. Often issued by companies that are in periods of rapid growth, where the ability to place debt to the high yield community would be limited because of uncertainty in the business model. And because of the rapid growth, the stock has a very high level of volatility, which makes the conversion feature attractive. So you'll see companies like Tesla or Amgen have used the convertible bond market to raise capital over the years, and we've participated in those offerings over the years.
Okay, so you graduate, you say, I'm going to set up my own company. Your family say you're a little young to set up your own company, or they said this was a good idea?
I was incredibly fortunate. My father was first generation to go to college. He was one of 7. My grandfather worked on the railroads. My parents always placed great importance in education. On my mother's side, my grandfather was an entrepreneur. He literally borrowed money from my grandmother's mother to start a small business, and ended up in the fuel oil distribution business back in the 50s and 60s. So that entrepreneurial bug was part of my mom's entire life. Like, she grew up in a family that was defined by my grandfather, who was a bit of a maverick. And so the idea that I'd go off and try to pursue this dream to my parents was very much just go for it.
Okay, so when you decided not to go to New York, where many people do these kind of trading operations, you decided to go to Chicago. Why Chicago?
It was a tough choice. My friends, obviously East Coast school, most of my friends were going to New York. And the firm that backed me out of college, Glenwood Partners, had 2 partners, Frank Meyer in Chicago, a gentleman here in New York. The gentleman in New York was central casting Wall Street, extraordinarily polished, understood financial markets. But Frank was like my high school physics teacher. And I had just a sense of trust in Frank, of camaraderie with Frank, that as somebody graduated from college, and this is how I'm going to make my career bet, I want to be close to Frank. And that brought me to Chicago, which is where Frank lived. And, lo and behold, you find yourself 2 years out of school, and Chicago's home. Okay,
so where'd you get the name Citadel?
Well, the first name we used was Wellington Asset Management. And a small firm in Boston sent me a letter and pointed out to me that they had used this name for many years and had built a very successful business, and suggested that I find a new name. And with all due respect, they were extraordinarily polite about it. Like, I've never, ever followed up with them, but they were, no cease and desist. They were completely gentlemen about this. But I actually asked all my employees, come up with names for our firm. And we put together a spreadsheet of a few hundred names, and we worked through these names, and we landed on Citadel because it's a sanctuary, it's a safe place, it's the fortress in times of distress. And to me, that had the connotations of who we were. A focus on capital preservation, a focus on being that safe place for your capital.
So you never considered Griffin and Company, for example?
No, the earliest names we used all came from British road maps. So take out a map of London and find names from the London road map. So Wellington, Kensington, names that denoted a timelessness. But Citadel was where we ended up, and it's been our name for almost 30 years.
So how many employees did you have when you first started? And what year did you start?
So the official launch of our first hedge fund was 1990, and it was probably myself and 4 or 5 employees at that point in time.
Okay, so you did it as a hedge fund. And a hedge fund, for those who may not know, is one where you typically get money in, and you get, let's say, 20% of the profits or something like that if you get above a certain hurdle, typically. Is that why you went in the hedge fund format as opposed to some other format? You could have done it regular long-only asset management where there's no percentage of the profits.
Never gave much consideration to the latter. So the hedge fund model, I thought, really matched up with what we were trying to do. We were trying to create for our capital partners a stream of income uncorrelated to the market, a very high Sharpe ratio, a very high risk-adjusted rate of return. And we had a bit of a different business model than most. Our only form of profit was actually our promote.
Okay.
And we were completely aligned with our investors on driving performance, and that's been the case for 30 years.
So in the early days, did you have to go out and raise a lot of money by meeting with investors, or the money poured in and you just had to worry about the trading operation?
So you and I have run into each other at places like the Beijing airport.
Right.
Right? The joys of owning our own firm is we get to work for hundreds of people around the world, and we've got to be on the road to raise capital. And in the early days, Frank Meyer was a fantastic partner helping me to raise capital. His reputation was pristine. His vouching for me was incredibly important to my success. And I was on the road.
Okay, so who actually made the trading decisions? You presumably did some of that as well. So were you giving direction to the traders about what to buy, or how did you deal with that?
So we had, in the early days, a series of models and analytics that would help to guide our trading decisions. And I was very fortunate to have hired a handful of colleagues who understood the products and who had very good judgment. What was most important, in many respects, in my life's journey, is we traded 24 hours a day from almost day one. So we traded convertible bonds in the United States, we traded Japanese equity warrants in Tokyo, and then we would trade the convert market in Europe. Now, why was this so important? Because I can only be at work 13, 14, 15 hours a day. I had to learn to delegate. And if I look at our success over the last 30 years, it really comes down to have learned to trust people, to trust their judgment, and to delegate to skilled people.
So when you use the word trading, sometimes the image is you're trading something for an hour, you see you have a little profit, you take your profit, and you go on to the next thing. Or sometimes people say, I'm trading, but I'm going to hold on for a year or two or three. Which mode was yours?
I would say our typical holding patterns in the early days were measured in months, not years. That would have been fairly typical, 2 months, 4 months, 6 months. It takes time for markets markets that are inefficient tend to stay inefficient. And it takes time for inefficiencies to be resolved.
So sometimes when you're a trader, which I'm not, when the market moves against you, you say, well, the market isn't smart enough to know that I've made a better decision than the market for the time being, so surely it'll come back. And sometimes people wait for a long time and it doesn't come back. And sometimes people are, maybe like you, say, look, I made a mistake and I'm going to get out of it quickly. Which are you? Someone hold on till the market comes to your knowledge and wisdom, or just get out when it's going against you?
All right, so first of all, the market is rarely dead wrong. And the history books are littered with people who are smarter than the market, who've lost all their money. So when you're in an investment and it's not working out, you really need to take a step back. What don't I understand in this situation? If you really think you've resolved all the unknowns that you can possibly get your head around, you stay with your position. But the history books of finance, the failure stories are people who do not respect the market. So
you started your business in the early 1990s, and then we came to the, let's say, the Great Recession in 2007, 8, and so forth. Before we went to the Great Recession, how big was your company in terms of employees or assets under management?
So from 1990 to 2008, we grew from effectively 3 people to right around 1,400 people. Assets under management, ballpark $25 billion.
Okay, so the Great Recession comes, and many people got really hurt in that. Traders, other people, private equity people, the entire business world. How did you survive it, and how close did you come to not surviving it?
So survival is the right choice of words. It was the only moment in the history of Citadel that our actual existence was in question. If I look at the 18 years up to 08, we'd never experienced a double-digit loss. We'd enjoyed an IRR north of 20% net to our investors, never had a double-digit loss, and had been incredibly blessed. And I did not foresee the intensity of the collapse that we were going to experience in the banking system, which, being a levered money manager, put us in a very precarious position as access to financing disappeared and a portfolio of financed assets cheapened in value because no one could engage in the arbitrage to keep the prices in equilibrium. So we never lost 10%, and in 16 weeks we lost half our capital.
So were you kind of nervous that the banks would call up and say, guess what, this game is over?
Well, we were equally nervous that the banks we would call wouldn't be in business. So it was a bit of a bilateral street at that moment in time. I remember when one of the large European banks called us to borrow money, and I'm like, this is just not a good day.
Right. So
yeah, it's.
Did you think you might not survive? Did you ever worry about that?
I'll make it very clear. I would go home on a Friday. If Morgan Stanley did not open for business on Monday, I would be done by Wednesday. And if you remember Morgan Stanley, the question was, would the Japanese follow through on their financing commitment, and their very existence was in question. So you quickly come to terms with the fact that we may not survive. And it may be an exogenous event in some sense that causes us to fail. And I have to accept that reality. And now that I've accepted that reality, what are the best decisions we can make to survive? And that was the playbook we came to work with every day. We are going to fight to survive, knowing we might fail, but we are not going to give up.
Well, you did survive. Morgan Stanley survived. And now you've built your business up in the hedge fund world to what size level are you now?
We're at $30 billion today. We've been there roughly the last 3 or 4 years.
Okay, now last year in the hedge fund world, 2018, was a difficult year for many hedge funds, and many of them went out of business or they shrank. You actually produced a profit for your investors. What did you do that some of the other hedge funds didn't do last year?
Well, the first thing to keep in mind is there's roughly 7,000 hedge funds today. So the array of activities that happen under these 7,000 roofs is just all over the map. It's very hard. It's truly comparing apples to oranges. What we did last year is what we try to do every year. We try to keep a portfolio that has very low beta to the market. And we try to earn our returns by making calls on the performance of specific companies or specific assets as compared to other assets. So, for example, in the equity space, I work with roughly 60 colleagues who are portfolio managers. They are true experts in the industries that they invest in, and they're really trying to identify the next great success stories. And we owned Apple for years while Apple was on just an absolute tear. And this is how our business works. It's about good old-fashioned stock picking, trying to find the companies where margins are improving or revenues improving in a way that others aren't anticipating.
So Bridgewater, which is a very large hedge fund, Ray Dalio, who's the founder of it, famously with, I think, 2 other people, make all the investment decisions after getting many people's input. Do you make the investment decisions, or do you delegate it to your various investment professionals?
So we've been here now for about 30, 40 minutes. And in our hedge fund today, we'll trade about 3 or 4% of the entire U.S. equity turnover. There's no BlackBerry, there's no phone.
Right.
99.9% of the decisions that we make, my colleagues are making. I firmly believe I want the individual closest to the information who has good judgment to make the call. There's no way from my seat that I'm going to be able, generally speaking, to make a better decision than my analyst who has covered Xerox for 5 years or has covered Amgen for a decade. There's no way I'll make a better call than they will.
But I suppose somebody says, I have a really good idea, but I want to put a lot of money into it. At some level, they must come to you and say, well, we're going to put a lot of the fund in, or they don't do that even.
Well, so if we look at PG&E, the California utility, it came, I was with my team on this just 2 or 3 weeks ago. This is before they filed for bankruptcy. There was a ability to lend them money on a secured basis to keep them out of bankruptcy. And literally from a Friday morning to Sunday afternoon, we put together a consortium of other investors, arranged a $5 billion funding facility, and delivered that to the board of PG&E and the governor of the state of California. So in a situation like that, where we're going to be part of a $5 billion commitment, I'm going to be involved. But the day in and day out, my colleagues are making the calls.
Now, recently, you recruited a very well-known trader from another hedge fund, and it is said that you spent a fair amount of time recruiting very good investment professionals. Is that a big part of your job, recruiting others to come to Citadel?
I have interviewed ballpark 10,000 people in my career. So recruiting is like, I will leave today and I will do 2 interviews today. I will do 2 interviews tomorrow. I am always looking for talent.
So if somebody is watching this and they say, oh, I'm going to be interviewed by Ken Griffin, what should they do in the interview to make you like them?
So what's interesting is the make you like them is a cognitive bias we have in interviewing people. And you actually want to avoid being caught in that trap. What I'm looking for 2 key drivers in a candidate. I'm looking for their passion. Do they love what they do? Do they love the problems that they work on? You know, there was a young woman who worked for us 15, 16 years ago, roughly a year or 2 out of an Ivy League school, I forget which one. And her boss came to my office and he goes, she's gonna leave. She's incredibly talented. She wants to go to medical school. And you need to convince her to stay. And I said, with all due respect, the minute she walks in my office, I will offer to write her letter of recommendation. If she wants to be a doctor, the world needs another great doctor, and I'm going to help her make that happen. So I'm really looking for what's the passion of the individual in this field, because that passion is what drives so much of our success. The second is I'm looking for clear accomplishment. I'm looking for individuals that have a demonstrated track record of having made good decisions and having accomplished in their life.
So do you look for people who went to very good schools, famous schools, did well there, or you don't really care about what school they went to? That's not a factor in the way you look at people when you're interviewing them.
Look, I signed off on a hire this week for somebody who never went to college. He's an extraordinarily good software engineer. A number of extraordinarily good software engineers, just they find so much opportunity young in life, they never go to college. So yes, it's helpful in the recruiting process to have gone to a great school, but if you fall into the category of exceptional, there's some exceptional people that never finished college. Bill Gates, Mark Zuckerberg. If you're exceptional, I don't really care what your background was, I care that you're exceptional.
Okay, so your main business has been, as the public knows, the trading business, where you're trading in and out of stocks and hedge fund, but you have a separate business where you make markets for other companies. Can you explain that business and why you're in that business?
So you summarized it correctly. We're in 2 businesses. Citadel's best known for the hedge fund. It's a 30-year history, and in an industry where the average hedge fund lasts about 3 years, we've made a name for ourselves. In Citadel Securities, today we're the largest market maker in the U.S. equities market. We trade about 1 in 5 shares that trade a day in the U.S., and we are also a large market maker in fixed income assets and options, both domestically and globally. And in that business, we are using a number of the core competencies that we originally derived Citadel's success from, which is predictive analytics and technology, to create superior pricing for people in the marketplace that want to trade.
So can you explain to those who may not know, a market maker is saying, I'll buy your stock, and you pretty much have somebody else lined up to sell it to, and you're making a spread on it? Is that how it works?
No, so I don't have the other side, and that's what makes me relevant. So exchanges work perfectly when you have a concurrency of interest in buyers and sellers. So you want to buy something at the exact same moment someone else wants to sell it. Now, that almost never happens. Even if you vary in time by just a few seconds, it doesn't happen. We stand in the middle, willing to continuously buy and continuously sell, so that a retail investor or an endowment or a pension plan can get what they want to get done instantly. That's what we do as a market maker. We inventory the risk, and then we recycle the risk into the marketplace when the other side materializes.
Now, back on your hedge fund business, I want to make sure I understand. You guys are looking at stocks or bonds or other kind of instruments and making your analysis, but you do not do the so-called black box kind of investing where you have complicated mathematical models and the computers almost make the trade. That's not what you do?
We do that too.
Okay.
So in the hedge fund, the biggest business is really good old-fashioned stock picking. And that comes down to my colleagues, and I take my hat off to them. It's knowing the management teams. It's knowing the corporate strategies. It's knowing all the things that you think about when you buy a company. That's what drives our success. Now, we run a large statistical equity arbitrage strategy in addition to that, which is based on the mathematics of finance. So if one stock outperforms another in a very brief period of time, we'll try to take advantage of that momentary discrepancy. So we will do that in the hedge fund in a fairly significant way.
So as you look at the economy today, 2019, as we're talking today, are you worried about the U.S. economy? We haven't had a recession for about 10 years. Are you worried we could go into another recession or not?
So if I look at the leading economic indicators, we still appear to have fairly clear weather ahead of us. There are some dark clouds out there, and in particular, the trade dynamic between the U.S. and China is a challenge for both countries. I really hope that Xi and Trump can come to a good understanding of how to create a necessary win-win for our two countries. Let's leave that aside. The U.S. economy, look, labor market is incredibly firm. We're seeing real wage growth that we haven't seen in a decade, and an absence of inflationary pressure. So this is a really good point in the American economy.
Now, you had your annual investor letter, and in it you talked about three things in particular that you were concerned about. One was Brexit, one was the U.S., China, and European U.S. trade relationships, and the third was Italy. Why did you pick Italy as a major issue of concern?
So Italy is the highest risk of being the next Greece in Europe. And we're in this very unusual moment in time with this idea of, was it modern monetary theory, which is just ridiculous, that countries can run large deficits with no consequences. Everyone seems to forget the story of what happened in Greece just a few years ago, which absolutely devastated their economy. And Italy, the combination of a rapidly aging population, very, very poor policies with respect to the labor market and growth, is creating a debt dynamic that's unsustainable. There was real trepidation last year in the market that Italy could potentially default. In fact, the incoming Italian political party floated the idea of a write-down of part of their outstanding debt, and it completely spooked the financial markets in Europe and globally. So the issue with Italy is they still run too large of a deficit, and they're not pursuing economic policies that will bring the young members of the workforce into the labor market.
Well, let's talk about Brexit. Are you worried that there will be a real calamity in England and really in Europe if there is not a successful Brexit, or if there is a Brexit at all?
Okay, so here's, at 100,000 feet, the single biggest problem gripping the UK is indecision. If the UK leaves with a hard Brexit, it will come with it a set of challenges. If they go to a second referendum and stay in the EU, then we have an idea what that will look like. But until they pick a path, it deters capital investment. People aren't building the new factory. They're not building the new office building. They're not creating jobs in the UK. Politicians don't appreciate when they create uncertainty, it kills the willingness of companies to invest.
So anybody watching this will see you're obviously an articulate, smart person, and somebody might say, I'd like to invest with this person. How does somebody invest with Citadel? And if they say they want to invest with you, is there a minimum, and is there a certain rate of return that that person should reasonably expect? And how long should they hold the money with you?
So I'm going to be the bearer of bad news. We've been closed for a long time.
Oh.
So we're not actively soliciting new investment. We will...
Even from interviewers, you wouldn't take any money? No. Okay.
You fall into like one of my idol categories. So heroes in my career, I'll figure out how to solve for. And I think that's actually an important statement. You know, your success or Henry Kravis' success, those are important stories that help to encourage the next generation to pursue a life with vigor, with passion. So leave that aside. We're closed to new investment.
You're closed. Okay. So, but let's suppose I'm already in, fortunate to be in. What kind of rate of return should I be expecting to get from my investments with Citadel? 5%, 10%, 15% annual?
So you and I are both in the managed expectations downward business,
Right.
so that we can produce positive surprise, right?
Okay.
And welcome to corporate America. And we tell our investors. Let me tell you our internal talking points. We're going to be top quartile in the industry every year. That's who we want to be. Some years we'll be in that top decile. Some years we'll be in that top quartile, but that's where we want to be year in and year out. And like I said, for us, it's a every day, the new idea, how do we drive a new portfolio of new opportunities?
So when you've built a business as successful as yours, obviously money accrues to the owners of the business. You are the principal owner of Citadel. You have other partners, but you're the principal owner. So your wealth has created opportunities for many other things, including philanthropy. And you're fairly well known for large 9-figure gifts to University of Chicago, where we both serve on the board, to Harvard, where I'm on the board and where you have been a graduate, and to other institutions. How do you decide what your philanthropic gifts are going to be? And the size of them is so staggering compared to what other people are able to do. Does this make you subject to calls by college endowments or other people all the time saying you should give to me or give to this program? And how do you go through all this? You have a team of people that went through all these proposals. How do you decide your philanthropy?
So first of all, I'm in Bloomberg's corporate headquarters, and Michael Bloomberg's gift to Johns Hopkins makes what I've done seem pretty immaterial. So congratulations, Michael, for really having completely set a new bar for all of us to focus on.
For those who don't know, Mike recently gave $1.8 billion to Johns Hopkins, among other gifts. He'd previously given $1.1 billion or $1.2 billion to Hopkins, and he's made another large gift as well. So he's very big, but you're pretty big at Harvard and Chicago.
So let's talk about those two institutions for let's just take a step back. Why those two institutions? What drives that mindset? Look, nothing is more important to American competitiveness than education. There's nothing more important, and it starts preschool and goes through our greatest universities. I've done a lot of work in K through 12 education, and the numbers involved are staggering. So if you look at a city like Chicago, we'll spend about $5 billion a year in K through 12 education. Here's what's incredibly regrettable. We know how to educate youth in America. We just choose not to do it. It's heartbreaking. In that arena, I spend much more time on the political front because it's our body politic that is letting our kids down. And it's simply inexcusable. It creates so many of the problems we face today. I mean, I wish Elizabeth Warren had 1% the passion to fix K through 12 education as she has to attack those of us who have been successful. On the issue of higher education, America leads the world. This is not a given. This is not a given that we have the greatest universities in the world, but I want to support excellence in American education. And when Harvard or Chicago are at the forefront of new ideas, new concepts, whether it's behavioral finance at Chicago or other work being done at Harvard, that impacts all of higher education in the US. Okay? It's a huge trickle-down effect. So Harvard, near and dear to my heart because of what it represents really the greatest body of ideas that we create in our country in academia. And University of Chicago has a place very important to my heart for two reasons. A number of my colleagues at Citadel are U of C graduates. They've helped me build one of the great financial services firms in the world. And then Bob Zimmer at the university.
He's the president.
He's the president, yes. Fights every day for free speech. And I know it seems, I'm in an incredibly receptive audience. This is the press. Free speech is what makes our country free. And it's unbelievable. We have to fight this fight on college campuses to fight for free speech, but we need to. And the University of Chicago principles, which you and I both are aware of, which are a mandate for free speech on college campus, I just believe in so passionately.
So in addition to your philanthropy to educational institutions, you've been very involved in philanthropy to art institutions, museums, so forth, Museum of Modern Art, Art Institute in Chicago, and you're also a very large art collector. So what is the appeal of art collecting to you, and where do you keep most of your art?
So I actually have a painting at home that I did, and it's so profoundly ugly, it's beyond imagination. Like, I have zero artistic skill. So maybe my love for art reflects my admiration for a talent that I'm so dearly lacking in. But it started about 2 decades ago. I was here in New York, Sotheby's. They were auctioning off a collection, and The Little Dancer, age 14, by Degas was there. It's a iconic sculpture. There's one at the Met. And she's so determined. She's not going to be put in her place. She's so determined, and it appealed to me so much. That was the pivotal moment that started my interest in art, was that work. For the record, I was outbid. I tried to buy it. The hammer went down. It wasn't my bid. I wasn't willing to go that far. And I've never been so frustrated in my life.
But you've never probably been outbid again, right?
I have been outbid again.
Okay.
There's some level of discipline, but I hung up the phone, and then I called Sotheby's the next day and offered more money to the buyer. So that was my start of a passion in art. And I really do believe art is one of the areas in which we can find a common ground as society. We can find an appreciation for art that brings us together. My art collection's almost all at the Art Institute of Chicago. It's been there for years.
Okay, so you're going to have your own art museum. Some people who have art collections build their own museums. Are you thinking of that?
No.
Okay.
No, I'm not. For me, the fact that 700,000 to 1 million people a year will have a chance to see some of the greatest works of art of our culture that I'm fortunate enough to own, I have great satisfaction in that.
So in recent days, or let's say recent year or so, you've become well known as well for buying a lot of real estate. So you have bought the most expensive apartment ever in New York City and maybe in the United States. You have also bought a lot of property in Palm Beach and other places, London, so forth. So you've gotten a lot of attention for this. Is the attention disturbing for you? And why have you bought all this real estate? You can't live in all these places. So what's behind it?
Well, you and I would probably be in competition for hours spent on a plane.
Right.
I think I probably spend 800 hours a year on a plane. So I'm actually in New York every single week. We have hundreds of employees here. We pay the New York investment banks roughly $1 billion a year in revenues. So this is my second home in some sense. This is home away from home. We run a huge number of our businesses from New York today. This is a huge part of Citadel's footprint, and I'm here all the time. I have 3 little kids. My ex-wife and I have debated, do we make New York home? And the apartment represents the possibility that this might be home for me, and okay, Citadel might be headquartered in New York one day. I'm a bit frustrated by the political winds in the city over the last few months. Amazon opting out of New York is heartbreaking. It's heartbreaking because when you bring a firm that is such a great user of technology into your city, it's not just about the success story of Amazon. It's about the fact that you now have a talent magnet that creates an entire ecosystem of success stories around it. So if I look at Chicago, a huge number of the hedge funds in Chicago are my former partners. Magnetar, run by Alec Litowitz. Alex was an incredibly talented investment professional, $15, $20 billion hedge fund. So when you see success stories, those success stories are not only success stories unto themselves, they plant the seeds of other success stories.
So like in Florida, where you grew up to some extent, you have bought something down there. Are you going to live down there for part of your life? I
will one day retire to sunny South Florida.
Okay.
That day keeps moving out. It's like a 20-year Ford that just keeps rolling forward. But I grew up just 20 miles away from Palm Beach. I love being down there. You'll love this. I hate cold weather. Like, I can't stand cold weather.
Well, do they have any of that in Chicago? Or?
We have a little of it.
Okay.
So any chance I get to escape cold, I take, because nothing drives me crazier than being cold. My son loves it. It drives me nuts. Dad, can we go skiing? I want to spend my weekends being even colder.
Now, you're obviously a successful businessman, philanthropist, art collector. Your parents must be very proud of you. So do they call you to tell you how great you are? Do they still give you advice? How do you honor them? And recently you were honored by the Robin Hood Foundation. Your mother came. Was that a great thrill to see you be honored and your mother's there?
Look, I'm certain Mom's proud of me, just as I'm proud of my children. We're all proud of our children, and I think my mom. We don't talk about it much. I saw my mom yesterday. I was at a conference in Boca Raton. My mom's down there for the winter. We went out and had a quick drink together, and I got parenting advice, like how to be a better parent. And we talked about raising children, because that's near and dear to my heart. I have 3 little kids, and Mom's going through, in high school. Here's how I thought about trying to encourage your interest and so on and so forth. Parenting advice.
Does she ever say, well, where do you think the markets are going? Where should I invest? Or does she invest with Citadel, or she does her own thing?
Mom's all set.
Okay.
Mom's all set. Happy that mom doesn't need to worry about it.
One of the problems of wealthy parents, among other things, is that raising children who don't have the wealth as a big burden to some extent. How do you deal with your wealth and your visibility and your kids? How do you isolate them from that, if possible?
It's a great question, because in this day and age, I mean, my son is known for years. I'm the most successful business person in Illinois. He's known this for years. You read the newspaper in Chicago, it's right there. All right, so how do you deal with that? One way in which I deal with that is the University of Chicago has a school for the faculty. It's the University of Chicago Laboratory School. It's
for the faculty children, called the Lab School.
Called the Lab School. And you ready for this? My kids fall in the category of diversity.
Because
they're not faculty children. And they go to University of Chicago's Laboratory School, which is majority faculty children. It's a school, let me be clear, I'm like second fiddle. I don't have a Nobel Prize. What matters at that school, the currency of success, is how smart are you and how smart are your parents. I have no Nobel. So I really try to put my children in situations where who I am doesn't matter.
Right.
It doesn't matter who I am at lab school. On the soccer field, no one goes like, I'm gonna let you take the ball from me because your dad's successful. And my son has to go out there and play just as hard as every other child to try to win that game.
So you think Alfred Nobel should have had a prize for investing? No?
No, I don't.
Okay, so let me just ask 1 or 2 final questions as we wrap up. You have been somewhat involved in the political world as a donor to Republican causes very often and conservative causes. Can you just state what your view is on political matters and freedom and things related to that? And would you ever consider being a candidate yourself for something?
So I've supported over the years candidates on both sides of the aisle. I do live in Illinois, which means that our mayor's race, for example, is I get to pick who I think, as a Democrat, will be the most business-friendly, education-friendly candidate that I can find. And you would probably know this, I was an early supporter of President Obama because he came to me to be the education president. That's, you want my vote, you want my support, that's the issue. You come to me and you say, I am going to fight for education in America, I've got your back. So that's number one. Number 2 is freedom. And in our country, a government that can take care of all of our needs also takes care of having left us with no freedom. It's very important that we as a country embrace freedom of speech, freedom of opportunity, freedom of what our founding fathers put their lives on the line for. That's important to me. And so candidates that really support personal rights, personal liberty on all causes are important to me.
Have you ever be a candidate for office yourself?
I don't know. Yeah, we live in a post-altered reality in politics today.
Right.
Facts no longer seem to matter. And that's hard for me to understand how I'd be a candidate, because if I were to be a candidate, it would be about the substance of how America will be successful. It would be about the substance of how we have our individual rights protected. And I don't do well in a debate which is untethered to facts.
So what would you like to see as your legacy? You've obviously got many years ahead of you, but do you ever think what you'd like your legacy to be as you get older?
David, I'm 50, for God's sake.
I know it's very young, but Bill Gates almost retired at pretty much at 50 from running the company, and some people, John D. Rockefeller retired in the late 40s, so you haven't thought of retiring at a young age, like 50?
Rockefeller grew up in a different era. We will live, knock on wood, we will live much longer, much healthier lives. And I really hope to contribute to society for decades to come. Whether it's in the business realm, whether it's in the philanthropic realm, I want to be relevant to society. I'm very fortunate to know how to build teams, to know how to make things happen. That wasn't a gift given to me. That's a lot of trial and error, a lot of learning. But if you look at Citadel, we are so successful. We are far more than the sum of the parts. We're far more. And when you can put together the right team with the right mission, you can accomplish great things. What I'm most proud of is actually how we've reshaped financial markets around the world with Citadel Securities. If you look at interest rate swaps, for example, we've helped to create a competitive dynamic that has brought bid-ask spreads down by roughly 80% in the last 10 years. Right. That's money that goes right into the bottom line of pension plans, corporate treasuries, and other parts of society, and not into the Wall Street value chain. So by bringing competition into the securities markets, we have created a huge creation of value for the end users of these products.
Ken, I want to thank you for a very interesting conversation. If you ever open up your fund again, could you let me know? Okay?
Absolutely.
Thank you. Great. Thanks very much. Thank you all.